Hello everyone. Today is Friday, March 5th. Another very turbulent day for the market, and I pulled up the comparison between my position yesterday to today. As you can see, yesterday I built a lot of short positions to hedge against potential risk. Um, well, in this morning, actually the market tanks even more. At that point, all my short position gave me a net profit of almost $500. But in the afternoon, the market actually pulled back. So I basically gave up all again. So yesterday I have this 151, and at the lowest point of the whole market, I was up by $500, and now I basically give up what I made yesterday. But just as I said, uh, it's actually fine because um, we don't know what's going on going forward. What we can do is to set up a risk limit and doing some hedges. So even if the worst case scenario happens, it can protect you, right? So basically, I'm just not getting the money uh, that I got yesterday. It's still fine. I think personally, I think it's much better feeling than losing money on my original principle. This is just losing the profit I didn't make. It's like nothing happened. So this is actually acceptable. And as I said, I really treat this as an insurance policy. Like every month you pay an insurance premium to your insurance company, just in case something bad happen, right? It's like okay, uh, everything is fine, so this is the premium I paid out, and everything should go back to the normal. But let's take a look at, is that really everything is really fine? So first of all, let's start with the broad market. So as you can see today, let's just start with Nasdaq because this basically the center of the market. The sell-off mostly happens here, and the pullback also happens here. Um, Yesterday is a really looking really risky because it's creating new low with a huge volume. And this morning, actually, yeah, this morning before 12, it's gapping down again. It's breaking down again, and that just causing panic. But fortunately, it's not the whole market is agreeing with the bear. There's people who waiting for the cheap discount and trying to get good deal. So when it's like 11:30, people started buying. So you can see this very sharp V-shaped recovery. However, with that being said, we still cannot safely say, oh, uh, the short is over, the decline is over, because if you look at the daily chart, we go from the very top in February 16th all the way down here, and you can see how severe those drop is. Just a couple of days, it evaporate all again since last year. So this is actually very severe drop. It's a big volatility. So my advice is, do not go in right away. I mean, those people who buy the V shape and make some money today, good for them. But it's still not stable. Let's just take an example from before, like here, right? You can see a lot of up and down movement last March, and that's really violent movement. So every time you see a big drop and a big pullback, uh, more likely than never, it would retest the low. See, see, this is the big drop, and this is actually a very strong pullback. It even created a new high here. However, it tests the new low again, and on the following days, it retested like a couple more times. So don't rush into yet. Let the other people to be the first runner and to see whether the ice is still thin or not before we put our foot on it. I always put the risk as the first priority. because if we cannot protect ourselves, it is just meaningless to talk about making money. Because imagine on March 13th last year, you think this is a V-shaped recovery and you bought in here, and next day it retests the low. How are you gonna fail? You you're not gonna feel real good. You will probably panic, and then you sell it here, and just back and forth. It's gonna lose a lot of money just at the bottom. So that's why there's an old saying that said it's really costly to try to time the very bottom or time the very top, because it's just you will be the frontier, and the frontier meaning more risk, of course more reward, but generally speaking, for retail investor, we shouldn't try to do we shouldn't participate in those very uncertain time. However, because today, as I said, today it does pull back, it doesn't like just keep going down another big red candle. That means that the market situation isn't as bad as we thought. So there's definitely hope. Just at this point, I think it's more likely to see it's trading sideways. Either gonna be a big drop next Monday, or going up a little bit, going back down a little bit. Just let it retest a few times, so that we can be sure. But today is actually the first decisive day that the bull try to fight back. Um, Before it just undercut the low, create a new low. But today, although there's new low, we actually go beyond this top. So that's actually a very good sign. Um, so I wouldn't say that the potential risk for market crash is completely going away. However, it is at least right now we see some stability, but uh, we shouldn't just going right now. However, on the other side, if you got a lot of cash, I think you can you can allocate a little bit of money, just buying the dip a little bit by little bit, but do not go YOLO. Do not go buy a big portion at those extremely turbulent time. And then let's take a look at all these meme stock, how they do. Personally, I think AMC is really doing badly. I know a lot of people have high hope for AMC, but it just doesn't go anywhere. I mean, it's doing a relatively good job compared to the broad market, where you can see like Tesla, all these high flying tech stock drop a lot, and AMC still be able to holding its ground. However, in order to see that Rocky Moon potential, we need this to break this line here about 9.14 with some kind of volume. And compared to AMC, I think GME is actually doing a better job. Although it's also like similarly holding its ground very tightly and not moving much. Um, but GME today is actually going up. Think about that. In a big market that everything's going down, GMEs actually have this bravery to go up against the whole market. So that you can see, people are actually very confident about this stock. But I wouldn't say the launch start right now, because we really need to see a very strong break of those high, before we can put the conviction that this is starting. But right now, I would say it's still gonna trade sideways more likely for the foreseeable future. And another meme stock, which I also traded, is RKT. So before I made those videos, I actually bought RKT here on March 1st, around $24. I didn't expect it would explode that high. So I got out somewhere here, $36. So from here to here, that's my profit for long it. However, because I know this is like a short squeeze, and normally what happens is if the short-term run is fueled by short squeeze only, it's more likely for it to go back down again. And that's why I short the stock at about 29.68. And today it continued to draw back down where it first started. I didn't. So if you look at my portfolio, I'm yeah 29.47. I made about 15%. I didn't get out yet, but I think it's probably gonna trade sideways from now on because normally all this meme stock when it has a huge explosive growth in very short period of time, it tends and if there's not like a very sound um, fundamental supporting it in the short time, it will just drift down, like slowly bleeding out, and that's why I shorted here. And of course, given the current market situation, uh, I think it's more likely to go down because of those conditions. Another thing I put some attention to it is WTI, and this is in oil industry, and we can see it's very weird for the past few days. The whole market, while the whole market's going down, many oil stocks in oil industry they actually going up. So seems as I said yesterday, seems like some people are using the oil stocks as a hedge. And today I picked the WTI because this one break out really strongly with a massive volume, and we can see it actually you can see it's over 30 million volume, 30 million of trading of shares, and there's a nice breakout, and that's why I decided to getting to it today. With that being said, it's now down a little bit, so but it's still within an acceptable range. But I put my stop loss right here. Like I know it because it's a really a dicey, risky market right now. Everything is very fragile. I don't want to over risk it. So if anything happen it next Monday, I will be forced out and lose some of the money, and I'm fine with that. Um, the key is always to keep eyes on the most promising target and just get rid of the things that don't work out. Um, Other things that I noticed is this one is actually ranked the top at in terms of number of shares trading is like 700 million shares traded. This is I think this is a medical company that they have some news regarding their new practice, their products, and that's why they have this explosive growth. It's like 300. Let me see how much BYES. Okay, it's actually down a little bit, but at the peak is definitely more than 300%. For this kind of like opportunity, for me personally, I don't get into it um, on the first day because well, there's another reason, of course, because today is everybody is putting their eyes on the whole market. If the market goes down a lot, it's gonna affect this because people you know got into the stock and they see massive gain and they see everybody else is selling off and they were thinking this is not looking very promising, everybody is running away, so maybe I should take some profit too. um, so you definitely don't want to rush into those kind of things on a broader market drop day. With that being said, it definitely has some potential, but I wouldn't rush into it on the first day. Let's see how it performs next Monday. If it's able to hold its price range about 5 and start bursting out, shooting up again, then maybe we can try it out a little bit. But for now, let's just put it on the watch list and see how it's gonna go next Monday. Because remember, there's a lot of stock like this every day. They shoot up 50%, 100%. Let me take a look whether I can find another. There's actually plenty of example. Okay, I guess the data is not loading up. Okay, and maybe it's not as extreme as that one, but those those kind of those kind of trades happen every day. See how high these things go from uh So yesterday was down by 4.81 and it's almost double its value, and that's crazy. However, you can tell this one just not holding its ground as good as the UIES ice. So it's actually very risky. Don't just like when you look at this, oh my god, it's shooting to up sky and just get into it. Always wait for a pullback, especially when the broader market is selling off. With that being said, just recap what I analyzed for today. I think the general market is not doing too bad, given given the the past 2 days. We definitely see a fight back from the bull side. However, we shouldn't rush into it yet. We should wait to see whether it's gonna retest the low and see whether it can establish a very firm ground before we get in and get all the cheap discount. And AMC GME RKT, I don't think we're gonna see a big huge performance in very recent time. GME, I guess, is the among all of the three would be the one with the biggest potential. And yeah, and there's a crude oil industry that we want to put eye on it because there's a huge volume and it break out while the market is going down. So this could be a very good hedge vehicle for all other investment. And don't chase into high flyer like UIES on the first day. So that's pretty much for the Friday. Let's see how the market gonna perform next Monday.